Good afternoon, everybody. This is Campbell McCrary again, Amvest Capital in New York City. Welcome to the Amvest Capital live webinar with Star Mining Corp. We're going to be delving into graphite and Brazil. Graphite, Star trades on the venture as STS, Sierra Tango Sierra, and on the OTCQB, that's the STS Beta Foxtrot, BF, Sierra Tango Sierra Beta Foxtrot. We hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of GoToWebinar, or simply email them in and we'll ask the questions in real time. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. This call is most definitely for informational purposes only. We're pleased to have with us today Richard Pierce, who's the CEO of the company and director, and he's live from Brazil. An engineer by background, he has over 20 years of experience planning and managing complex operations throughout the Americas. The wide range of consulting and advisory experience on the technical, operations, financial, and business side. If you want to turn on your webcam, Richard. Following the presentation, again, we'll be asking questions of management, and we hope you'll send your questions in. And a copy of the on-demand replay will be sent out, but you can get an advanced copy at amvestcapital.com/replays. So with that, welcome to the program, Richard. You have the floor.
Thanks, Campbell. Excited to be here today to speak about Santa Cruz Graphite Project in Brazil. As the title says, we're a production play. We should be in production next year, and this truly is a fundamental value and premier battery metals jurisdiction. Everybody's favorite slide. So I'd like to highlight just a couple points. First, the management team is extremely experienced, and we've got a proven track record of taking projects from paper through to construction and into operation. So we truly are mine builders and mine operators. We've done it before. We have other operations that are in production. I've been in Brazil for over a decade, so truly an unbelievably experienced team that is boots on the ground. The other thing I'd like to highlight is basically the two-phased approach. Phase one is a 5,000 ton per year pilot plant operations with approximately $8 million capex. Phase two is, the way it's conceived now, is a 25,000 ton per year concentration plant with an approximate $27 million capex. So all in, it's $35 million capex. The way it's conceived now, I really like this approach. Number one, for a question of risk management, it allows you to kind of spin things up, get your material qualified, place your material in the marketplace, develop those commercial relationships that are so important in industrial metals. The second thing I really like about this is it's, in my opinion, an intelligent way to allocate capital. So phase one is a fairly modest capex. It allows you to get into operations and get material out there, and then you actually size your phase two based on real commercial relationships with clients that you're developing for the long term. Couple advantages that I always like to highlight associated with the project. This truly is a world-class large flake deposit with 65% of the overall ore body. A large flake meaning it's greater than an 80 mesh material. Those materials can be used for some very high-tech, high-value add uses, as well as being a better pricing in terms of just straight concentration. Brazil itself has a large internal demand for graphite concentrate, which is fantastic. Currently, it's 80 to 90,000 tons per year of internal demand, so we can sell into that market without ever having to export anything. There's a huge geologic potential. We're just playing on approximately 5% of our overall area. We have over 13,000 hectares staked currently, and so it's a large geologic upside. We will be drilling in 2021 as well as in 2022. We have 10 to 15 drill ready targets. So we should be able to scale this thing up quickly. You can't throw a rock out there without hitting graphite. So it's an unbelievable geologic upside potential. And as previously mentioned, we're just starting to advance some advanced metals testing as well as battery metals testing. So we should start getting those results momentarily. I anticipate the next week we'll be getting some results out to the marketplace. So excited to see those and should be very positive in terms of showing how our deposit is fantastically placed for battery metals and other high-tech uses. A little bit about the share structure. Currently outstanding 71.5 million shares, fully diluted 101 million shares. We went out for basically a $1.5 million raise. We came home recently with $2.5 million raise. Insiders own 22% of the overall shares, and we have an approximate 7% institutional investor position currently. Corporate structure, again, is very simple. Southstar owns 100% of the project. Basically, there's no significant debt, no royalties, so it's a fairly clean, straightforward structure. The team itself is a great group of folks that I've been working with for more than 10 years. Good capital markets experience, great operational experience, again, great Brazil experience. We have, IR and some financial folks in Canada. Much of the management team is actually located in Brazil, including myself. Just talk briefly about myself. I spent much of my professional career in Denver, Colorado. I have degrees in economics and engineering. As I previously mentioned, moved to Brazil in 2008. I've been here full time since that. Again, 20 plus years in Latin America, working on mineral resources projects and advancing them from ideas all the way through to operations. The project itself is exceptional. There's so many advantages that I think it'll speak for itself as we kind of move through this. So it's a very friendly mining jurisdiction, very established mining jurisdiction, open pit mining, oxide ore deposit, no drill and blasting, very low strip ratio with at surface mineralization, proven flow sheet. We're not reinventing the wheel. Basically, what we're proposing is similar to the other Brazilian operations with one important exception, and that being no traditional pulp tailings facility. So we'll be using filter tails, basically taking the water out of the tails, and we'll be co-disposing of the tailings in with the waste rock facility. So it'll be a dry stack tailings facility that's co-disposed with the waste rock facilities. Excellent infrastructure. We're ready for construction, fully permitted and fully licensed. The project is basically de-risked. We've tested the met circuit. We've gone through detailed engineering for phase one. Really, the phased approach, phase one, phase two, significantly de-risks. Going through a large capex, then having to develop those commercial relationships, almost immediately be able to pay back the loans and other financing obligations, et cetera. So again, I like this stepped approach, and I believe we're the only company out there that's really doing it. Very low environmental risks. We have a very small footprint. Everything has been tested. Our tails, our waste rock has been tested. It's inert, non-dangerous. So again, very small environmental footprint. We'll be recirculating water as much as possible. Very low OPEX. We'll be in the first quartile of our cost. Very low capital intensities. So really the only thing we're left with is basically the execution risk. And that's, again, where I think it's so important to have an experienced management team that's done it for a long time. Just talk real briefly about the infrastructure. Again, I think we have one of the most amazing projects as it relates to infrastructure. We're 1.3 kilometers off a paved road. We have a graded gravel road straight to the mine site. The power substation is basically 4 kilometers away. Gas pipeline is less than 5 kilometers away. The water itself will be provided on site from wells, again, because we're recirculating the processed water and using dry stack tails. We'll be recirculating most of our water, so very small new water demand. Major ports of Ilhéus, so 270 kilometers away. We have one of the major container ports in Vitória, which is approximately 450 kilometers away. And I think another important point to always point out is just an unbelievably experienced workforce. Brazil's been producing graphite for 80 plus years. We're on trend with another operating mine. So again, we'll be able to take advantage of that experienced workforce that's been producing graphite for decades. And finally, we're close to industrial centers. So as I previously mentioned, Brazil has a large internal demand. We'll be able to ship con and other value add projects to Sao Paulo, to Belo, et cetera, to be able to take advantage of the local demand. In terms of ESG, again, because we have other operating facilities that are in production, this is just kind of our normal DNA. So sustainable development, we've been doing all along. Brazil is blessed in the sense that it has 80+% of the energy comes from renewable sources. There's fantastic tax incentive programs for solar programs. As we previously mentioned, again, the dry stack tails, recirculating water. The waste is characterized as inert, non-dangerous, low strip ratio, so our footprint is extremely small. In terms of the social commitments, again, this is our normal way of doing business. So we'll hire mostly local labor. We'll be the first major industry in the region. We're committed to ongoing environmental as well as educational opportunities for local workforces. Again, we're committed to ethical professional interactions. Our overall approach is that our approach to it is really committed on having a very open, transparent process. In terms of governance, again, we're committed to the highest standards of governance. We're a publicly listed company, 2 independent directors, and we have all the obligations that go in with audited financials, putting out quarterly results, et cetera. So again, committed to ESG, and it's our normal way of doing business. This is the slide I think that gets everybody excited, and certainly gets me excited. When you look at what's out there in terms of projected supply and demand kind of relationships, when you look at this, it's fantastic. Think of graphite basically in 2 buckets. So you have industrial uses, which are growing at GDP sorts of growth rates. And then you have the value add bucket, which basically is growing at 20–30% year over year. And that's kind of what you see in the dark red. And mostly that's related to the battery metals. Currently, the worldwide demand is around 900,000 to 1 million tons per year. By 2025, that's expected to double to 2 million tons. And again, by 2030, that's expected to double again to close to 4 million tons. So what does that mean in the short term? Basically, that 10 to 15 new mines need to come online between now and 2025 to come close to meeting that demand. And none of this really takes into account sort of the exciting new applications associated with the high value add. So if you think about graphene, foils, et cetera, some of these applications that we're looking at are truly revolutionary. So most of this scaling comes strictly from the battery metal space. And if you include some of these other areas, it's even more exciting. And again, the natural graphite, I think, has some inherent advantages compared to synthetic. It's much lower cost. It's much smaller in terms of environmental impacts. It's much easier to scale, and it has a higher energy density. So some significant advantages to natural flake graphite compared to synthetic graphites. And there's not a lot of substitutes out there currently for natural flake graphite. This is another great slide. When you look at just the battery metals market, I think we're truly in for a perfect storm. On the left, it shows kind of percentage growth between now and 2050. And on the right, it shows in terms of volumetric tons. And as you see, graphite is projected to grow at over 494%. And just as importantly, compared to many of these other metals that are on here, in terms of volumes, graphite itself, again, is expected to experience large growth from basically 900,000 tons to over 4.5 million tons to be able to meet just what's projected for the battery metal supply chain, not even mentioning some of the other industrial uses and other high-end uses. Again, graphite, or Brazil truly should be considered a premier battery metals jurisdiction. It's the #2 graphite country in terms of production after China. This kind of shifts depending on whether Syrah is in production or not in production. When Syrah is not in production, Brazil is number 2. When it is in production, it's number 3. Again, a very long history of continuous production. And this is another graphic that I found the other day, and I think is fantastic. Brazil is currently classified as the 3rd most important country in the EV supply chain. Again, Brazil is number 2 as it relates to graphite and iron ore. It's number 4 in the world as it relates to bauxite production. It's number 5 in the world as it relates to manganese. It's number 7 in the world as it relates to lithium. Number 8 in the world as it relates to nickel production. And number 14 as it relates to copper and aluminum. So truly one of the most important countries as it relates to the supply chain for battery metals. Again, just a world-class flake deposit with over 65% being plus 80 mesh. This has some inherent advantages to it in the sense that the con is better priced, and then some of these higher value added applications related to electronics and industrial uses can be taken advantage of, particularly as it relates to expandable graphite, fire retardants, foils, etc. A little bit about the resource. Again, it's a sedimentary deposit, disseminated ore body. The mineralized zone itself varies from 40 to 200 meters wide, so pretty easy mining. It's visual, so you can actually see it. We have 14.9 million tons of basically 15 million tons at 2.3 in terms of resources. We were fortunate in that most of that was actually converted into reserves. Again, so we have 12.3 million tons in reserves at a 2.4. Our first year's production is expected to be around 3.3, 3.4% Cg. The financial metrics of the project itself are unbelievably robust. $81 million NPV5, 35% IRR. In terms of payback, it's 4 years from the start of construction. So again, short payback, open pit, simple milling and flotation. Again, just first quartile OPEX with sub 400, and we're assuming at this point a basket price of $12.85. So again, just very robust economics, very conservative in our approach to coming up with these numbers because we have other operating facilities. Again, we know what our mining costs are, we know what our labor costs are. So I'm very comfortable with these numbers and the way they're presented. And truly, this is an undervalued play when compared to our peer group. So you can almost take any metric out there, be it enterprise value as a percent of NPV, enterprise value as a ton of CG. South Star is truly undervalued. And why is that? Basically, we got our mining license approved December 31st of 2020, so end of last year. And now we're really pushing hard to get the message out there and raise the profile of the company. We think the project, the team, and the value proposition will speak for itself. And being the first new operation that's put into production in the Americas in over a decade, I think will give us kind of a head start when compared to most of the other projects out there. Again, low capex in a district that's been producing for 80 plus years. The market likes Brazilian graphite. They want more Brazilian graphite. They understand Brazilian graphite. And most importantly, it's a diversification away from Chinese dependency. Again, in terms of OPEX, it's first quartile of cost. This kind of compares capex to IRR. So again, when you look at some of these capexes, which are 100, 200, $300 million, many of these projects are investing significant amounts into just basic infrastructure, be it energy, logistics, 500-600 kilometers away from ports or population centers. Folks are going to have to be flown in or out. We're not frozen 3 or 4 months out of the year, so we have some significant competitive advantages. And quite frankly, some of these projects just aren't economic and will never be funded. This is a really compelling graph that I like. So we basically put the study phase versus the market cap. And again, what South Star is split into two for phase one, and then phase one and phase two. When you look at it, as far as I know, we're basically the only project that's gone through all the study phases. We have detailed engineering. We've done all the metworks. We have basically resource. We have reserves. The phase one operations are fully licensed and permitted. So again, we're significantly ahead of most of these other projects. I'll also like to point out that many of these projects basically have studies that are 2, 3, 5 years old. Again, so somewhat outdated. Capex, OPEX has changed significantly. So I think, again, we're comfortable in our numbers and very confident we'll be able to put this in production and be profitable. Again, it truly is a unique opportunity. We've got experienced mine builders and operators that know Brazil, we know Latin America. It's a construction ready, fully licensed project with low environmental impacts and strong ESG, robust economics in an 80+ producing jurisdiction, scalable, we're just scratching the surface, a team that's really focused on risk management and intelligently allocating capital. We'll be looking to really scale this thing up quickly. And as a closing, this truly will be one of the first new mines put in production in the Americas in over a decade. So it's a fantastic opportunity for us and for investors. We believe this is the way to deliver long-term value to shareholders. And that's basically it. So I'll open it up to questions and comments and look forward to hearing from you.
If you could add a little commentary, Richard, to your relationship, a bit more with your commentary, a bit to your relationship to the federal government and local government, and more local native groups.
Sure. Great question. I think that's, again, another key is having a very experienced management team that knows how to deal with municipal government, state government, as well as federal government. So again, as in most places, we have three levels of government that we have to deal with. We have a fantastic relationship with the local government. We've already set up separate work programs with them. As I mentioned, we're committed to ongoing relationships and continuing education, be it workers training, be it environmental education, et cetera. At the state level, again, we have fantastic relationships with them. We're working with the state development task force that kind of helps new projects come online. So as I mentioned, we'll be the first industrial project that comes online in this municipality. We'll be able to take advantage of municipal and state aid programs that help train, they help us liaise, and again, we're very transparent, we're very open about how we deal with these things. And again, because we've done this for over a decade, we're very experienced in dealing with this in an effective manner. So be it from the mining license standpoint, be it from environmental permitting, be it from your social license to operate. Again, I think that's where having an experienced management team is critical. I've shut down mines, I've spun them back up, we've operated them. So again, we feel very comfortable where we're sitting now, and we have fantastic working relationships with both the municipal, the state, and the federal government agencies.
How much time did it take to get the phase one permit? What do you expect for the phase two permit?
Again, we got our terms. I think we put out a press release maybe 2 weeks ago, something like that. So we got our terms of reference from the environmental permitting agency that's responsible for it. They said it's basically going to be a very similar approach to what we're doing for the phase one operations. So more or less, we anticipate we'll submit the environmental permitting documents by the year end. We've already kicked off the environmental process. The team has already started, so we're starting the studies for the phase two operations. Again, we'll submit the documentation end of year. And if it's similar to what our phase 1 approach is, it took us about 6 months. So from the time we submitted the documents to the time that we actually had our license approved, it took 6 months. So if everything's similar to what phase 1, mid next year, kind of June, July of 2022, we'll have our phase 2 environmental permits. And then the mining operation, the permit for mining operations, basically, we have to get our report approved. And again, that should take about a year. So that process is also started. And then we'll have basically they call it Portaria de Lavra. It's our mining license is good for the life of mine.
Is there much
but both
different?
our current licenses can be renewed as needed.
Is there much difference between the permitting terms of phase 1 and versus phase 2?
Yeah, so phase 1, we're basically restricted to 5,000 ton per year production per claim. So for example, if we wanted to bring another mining claim online, we could add another 5,000 ton to our current mining license. So we could go to 10 if we wanted to add another claim. But basically what we're shooting for is by mid next year, we will have life of mine with the phase 2 operations fully conceived as the way we're imagining. So we'll probably go to something, we'll probably permit and fully license something in the range of 40 to 50,000 ton per year operations. And then we'll work through our capex and our commercial relationships to fully size the phase 2 operations.
Have you done detailed analysis of your end product specifically, or potential end product, specifically trace metal content?
Yeah, we have tested it previously, and as part of this press release that we'll be putting out next week, again, we did a 70 metals mineral suite test on our con. Again, fantastic results, no contaminants, and some, I'll wait to go into detail on it, but I think we'll have some very positive news coming out as it relates to some byproducts that we weren't expecting. So in general, no contaminants, it floats really easily, fantastic con, very large flake. So we fully tested it and very positive results so far.
What stage are you in the process of testing your potential product regarding its usage in battery applications?
Sure, great, another great question. So again, when you look here, let me, is my screen still up, eh?
Yeah, and do keep it up, yep, but you can flip around.
I don't have it. Well, I'll come back to that. So basically what we've done is as part of our met work, we basically went through producing, we took 30 tons of ore, we came down to about a ton of concentrate. We tested that concentrate for industrial uses as well as the high value add uses. And we've concentrated all the way up to 99.95 in terms of purified graphite. We've spheronized it. We've tested it for expandability. As part of this testing program that we're going through now, we're actually building a coin cell. We'll be going through the long cycle testing program. Again, so the material is fantastic in terms of applications for battery metals. It's fantastic in terms of high value add, expandable graphites, defense departments, electronics. Again, it's testing very nicely because Brazil again has produced graphite for a long time. It's performing in line with the Brazilian graphite experience. So again, the market is liking it. We've taken 1 to 3 kilo samples. We sent it out to over 30 plus different clients. They've all liked it. They've all tested it, be it for their particular applications, be it battery metals, be it industrial, be it expandable, et cetera. And now they're asking for basically our production schedule as well as 1 ton, 5 ton, 20 tons of material so that they can then classify it and qualify it for the high-end uses. So basically we've gone through the first initial steps. Our next steps are basically to ship 5, 10, 20 tons once we're in operations. As I mentioned, it can take anywhere between 12 to 18 months to get your material qualified for some of these higher end battery uses. So, if you want to sell to Tesla, LG Chem, et cetera, it can take anywhere between 12 to 18 months to fully qualify your material and then have them ready to sign binding offtake agreements. But on some of these other uses, we're already qualified. They just want to know when we're going to be in production. And as part of this ongoing testing program, which we'll be releasing results month by month over the next 3 or 4 months, we'll have very positive news coming up.
Great, thanks. Artie?
Thank you. Are you investigating research and development partners, maybe potential joint venture? How will you comment on this?
Yeah, we are in ongoing conversations both on commercial relationships, offtake agreements, as well as ongoing partnerships and joint venture relationships. Again, because Brazil has a large internal demand, we are exploring some joint venture operations where we would be providing raw material or value add material for industrial applications, as well as some higher end value add applications, specifically graphene in a certain case. So Brazil has an institute based here that's really focused on graphene. It's associated with Mackenzie University and is part of the global research community for graphene. Brazil is currently producing graphene, and for example, they're currently producing graphene, using it, for example, to line internal combustion engines. Because it is a nanotechnology, it's able to provide fantastic characteristics in terms of lubrication. So it actually increases productivity and efficiencies of the motor, at the same time providing unbelievable protection as it relates to the thermodynamic characteristics of the engine block and wear, without actually significantly changing any of the internal design specifications of the motors. And so there's lots of fantastic applications that are being explored. They're starting to put graphene in paint, which then is applied to commercial as well as military aircraft, and it significantly reduces the weight of the aircraft, increases engine productivity, and at the same time they're experimenting with putting photovoltaics into paint so that it helps charge batteries and potentially provide an additional power source for aviation. So we are in current conversations both on offtake agreements, commercial relationships, as well as R&D and joint ventures. So again, we anticipate having some very positive press releases coming out here over the next couple months.
Thank you. When do you think it's the time for signing a sale contract for these kind of projects? And you mentioned you guys contacted with plus 30 high-end users. I'm wondering, all of them are investigating the high-end users of graphite?
No better time than the present, I would say. This is a company that we're building brick by brick and spinning it up into production. So as I mentioned, we've been having conversations for a year and a half about certain quantities and types of graphite, those types of things. And as I mentioned, those are ongoing. We should have some significant announcements here in the short term. And in terms of kind of the profile of companies we're talking with, again, the ideal thing is that we're selling the best value product to our clients to create the most value for them. So as we look across our entire range of possible products, we want to sell as best we can the most profitable value add products out there to be able to create value for our clients. So as part of this study that we're going through, they're basically looking across our entire range our portfolio of products that we can produce. We'll be identifying where our inherent characteristics create the most value for our clients. And then we'll be to continue to advance those conversations and signing agreements. So we're currently have about 4 conversations going on, some of them for industrial applications, some of them for value add applications. So again, we're looking to basically be able to qualify our material for the higher end value plays as well as the typical industrial applications, so that we can sell our entire basket of products at good prices and good profit margins and create, fantastic value for our clients.
And supply and demand situation for the industrial one in Brazil, how would you comment on that?
I think in general, Brazil is unbelievably blessed in raw materials, skilled labor, certainly one of the premier mining jurisdictions anywhere in the world. They're just starting to kind of gear up some fantastic R&D facilities here. As I mentioned, I think MacGraph is one of those facilities. That's the research facility associated with McKinsey University, focused on graphene and high-end value uses. So I think sky's the limit. You have 210 million people. You have one of the few countries that I know of that truly has no natural disasters. There's no hurricanes, there's no earthquakes, there's no tornadoes, there's no blizzards. We have temperate climate. It's a fantastic jurisdiction to be operating industrial facilities in. Fantastic workforce, and I think it's something that currently it's very focused on industrial applications as it relates to graphite and certainly battery metals. But again, I think it's something that when you look at it, the largest battery manufacturer in Latin America is based here in Brazil. They're selling batteries throughout the world, but certainly they're selling batteries throughout Latin America. You have these fantastic R&D facilities which are being always improved, and they have fantastic universities here. So again, I think sky's the limit, and we look to be able to announce some strategic partnerships. We've already had ongoing discussions. We're working our way through the process, and we should have some fantastic announcements coming up shortly.
Thank you. Camel?
Sure. You go over your financing history and future financing needs, and for your sort of different stages and things. And then I have another question and we'll close.
Sure. Great questions.
Or please send in your questions, those of you in the larger listening audience. So the clock is ticking. So, okay, go ahead.
Fantastic. So again, we went out for a small raise. We thought we would go out for about $1.5 million. We came home with $2.5 million. We again, fantastic shareholders and fantastic support. We just recently announced the exercise of warrants, so we put another $500,000 into the kitty. So we've got good runway. The board has been gracious enough to approve that we advance as quickly as possible towards the phase 2 licensing and permitting. So again, we're going to be going as fast as we possibly can on that, and we're trying to basically accelerate the phase 2 operations by about a year compared to what we were initially conceiving. We will be doing a drilling program this year, which includes geophysics, sampling, mapping, as well as around 4,000 meters of drilling. So again, we've got 9,000 meters more or less into it. We're probably going to put another 4,000 to 5,000 meters into it. So I expect to really be able to increase the size of our resource and our reserves. Again, we'll be looking at really equating that into reserves and how that equates to phase 2 operations, and being able to scale this thing up so that we can have decades of production here In terms of what we're anticipating, somewhere in the range of 12 to 15 million is what we're looking at. Approximately $7 million in debt, approximately $7 or $8 million in equity, as far as being able to have our construction funds, land acquisition, sustaining capital, exploration, licensing and permitting work, and then corporate G&A. So that's basically a summary of what we're looking at. As I mentioned, we should be having some significantly positive press releases coming out here as it relates to offtake agreements, joint ventures, debt agreements, et cetera. So lots of good information coming out, and we're excited about what this year and next year holds for us.
Any comment on your valuation?
That's a loaded question. Yeah, I think the best thing we can do is keep doing what we're doing, which is delivering value, advancing the project, and putting this thing into project as quickly as possible. I'll flip back here a couple slides. Again, I'm not here to beat up on anybody, and I think what we'll see is that there will be a distinct advantage to being a first mover, a prime mover, and as I mentioned, we're going to be the first mine and production facility in over a decade that gets put into production in America. So I think we'll have significant advantages associated with that. The markets were hot into February, first part of March. Things have calmed down a little bit as it relates to battery metals, and certainly the market as a whole related to mining and mineral resources, but the markets in general. Again, because we have a fairly modest capex, a very experienced team. We've built mines. We know what it takes to put them in production. Again, we can put this into production quickly, cheaply. It's all modular sort of construction. So the idea is we'll basically skid mount all the major equipment. We'll put it on a flatbed, take it to site, spin this thing up quickly, get it in production. When you look at our market cap compared to some of the other companies that are out there, you've got companies that have no resource, they have no reserves, they have no network, and they're trading at significantly higher multiples than we are. Eventually, at some point, I think our job is to get the message out there. The project will speak for itself. The project will be extremely profitable. The team will speak for itself, and I think the opportunity is fantastic compared to everything else that's out there. When you look at different jurisdictions, when you look at different companies, when you look at different capex, capital intensities, I truly think this is one of the most unbelievable opportunities out there. And again, our goal is to put this thing in production and scale it. Our goal is not to flip it, not to merge it with some other company and disappear. Our goal is to put in production and scale. So that's kind of our philosophy on this. I'm really excited about advancing these things and continuing to deliver midterm, long-term value for shareholders. And I think when you look at where we're at currently with our market capitalization versus many of the other peer group, we have just an unbelievable opportunity to make a pretty exciting story come true for ourselves as well as our shareholders and the communities we operate in, and we want to provide good value for our clients. So again, this is a long-term scalable operation that should be in production for decades to come. And that's what we believe delivers long-term value for shareholders.
Great. Thank you very much. Thank you everyone for tuning in. Please share your feedback upon exit, and we'll talk later. Thank you.
Appreciate everything.
Bye.
Thank you.
Yeah. Cheers.